from earlier this morning. From UBS, a perfect day to speak to Paul Donovan in London. Paul, Mr. Juncker made some comments about Greece just to get our weekend started early. What will we see through the weekend? What should we look for into Friday and into the G8 meetings?
Well, the G8 itself, I think, will accomplish what all G8 meetings do, which is exactly nothing, except spending taxpayers' money on a complete waste of time. As far as the euro situation is concerned, Juncker's comments are not necessarily a surprise of themselves. I think markets have always had this at the back of their minds. What is a surprise is you've got somebody, the chairman of the Eurogroup, no less, coming out and saying this in public. You're not supposed to declare that the emperor's got no clothes. You're supposed to keep quiet about that particular point.
We have seen this now twice. We were prepared for the Spanish elections. We saw a terrific move out of Asia Monday morning. Now we see what I would call a sudden move this morning with this comment. Why are totally wired-in media and investment markets continually surprised by European statements and actions?
Well, I mean, I think what we've got at this stage is varying degrees of understanding about the political risks. And this is the key problem. We have entered into a more politicized global economy. Politicians are trying to run economies. Now, politicians aren't qualified to run economies. Only economists are qualified to run economies. But what that means is we're getting random political events, random political statements, which do have the capacity to surprise markets. Markets normally are bad at pricing in political risk. And the comments from Juncker today are a prime example of political risk.
Does that suggest that Minister Lagarde is the inappropriate choice for the IMF?
Well, frankly, I prefer it if we had an economist running things rather than a lawyer. Goodness help us. But I'm afraid we're probably going to be stuck with her. As long as she appoints a decent economic assistant, that will be fine. But really, if I was in charge of these things, I would be looking to put in place the most competent person, regardless of nationality, regardless of gender. And the most competent person, of course, is going to be an economist, not a lawyer.
Good. Let's do this. Let's bring up this chart. We'll come back to the Europe and IMF in a bit. Inflation in the United Kingdom, stagnation and inflation. And there it is, UK inflation ex mortgages. And there it is, Paul. You see it come up. It's not what we saw in the early 1980s. But not only is it elevated, but hasn't it been persistent recently? Can we see that in the United States if we see it in the United Kingdom?
Well, you've got it in the United States relative to the UK. UK inflation is lower than it is in the United States, and it's in line with that of the Eurozone when you exclude the one-off sales tax increase that we've had. Now, the British government, in its infinite wisdom, is unlikely to impose a second hike in the VAT sales tax. If you ignore the VAT sales tax, UK inflation is exactly the same as the euro areas and below that of the United States headline rate at the moment. So when we look at what really matters in terms of inflation in the UK, you know what? We really don't have that big a problem.
Well, that's optimistic to know. As you observe the U.S. economic data today from London, does it sense to you a soft patch or a dampening?
Well, it says to me that we're entering into the mid-cycle phase. So we are going to see a period of perhaps more moderate growth numbers coming through. And is the market going to be disappointed? Yes, frankly, the market is going to be disappointed because the market's been doing what it always does. It gets ahead of itself. It's got a little bit too optimistic. And now some of that optimism is going to be quietly knocked on the head. The data's going to be fine. It's consistent with sort of trend-like growth, mediocre recovery, but we're there. And I think that's just going to be a little bit disappointing given where expectations were maybe a couple of months ago.
Let's look at this chart. Paul Donovan, it's a DXY index. It's that weak dollar from 2002. But philosophically, the weak dollar as a growth engine. Can we really buy the idea that a weak sterling can be a growth engine for the United Kingdom or a weak dollar for the United States?
I'm quite sceptical on the value of currency weakness as a direct engine of growth. Because what happens is companies don't change prices when currencies move. It's just a fact. Floating exchange rates don't work the way they were all supposed to in the early 1970s. You don't get companies changing prices. Now, what that means is if a currency goes down, exporters get a boost to their profit margins. But increased profits are not positive for growth unless companies then do something with that money. They take the money out and invest it, that's positive for growth. Sitting on a pile of cash is not positive for growth. And of course, what we've been seeing over the last couple of years is companies have made better profits, exporters have made better profits, but they haven't taken those profits and invested them. They've not paid them out in dividends. They've not particularly increased wages. They've just increased cash on balance sheet, and that's not growth enhancing.
Earlier this morning on Bloomberg Surveillance, I spoke with Desmond Lockman of the American Enterprise Institute, and I asked him the mistakes the economist Strauss-Kahn had made with the IMF.
The basic thing that he got wrong is that he regarded the problems in Greece, Ireland, Portugal as problems of liquidity rather than problems of solvency. These countries had massive imbalances, and what he then tries to do is he tries to solve those problems without either allowing those countries to write down the debt or to devalue their currencies.
Desmond Lockman, AEI this morning. Paul Donovan of UBS, some strong language there. It seems to me that the politicians never took a chapter in game theory. The knock-on effects, if a given point, say Germany, or name the other country, does something, what will we do, et cetera, et cetera. There's a lot of game theory going on this weekend, isn't there?
There is, and I think one of the big problems that we've got is the perception of what's going on in Europe differs very, very widely depending on where you're sitting. If you go and speak to somebody who lives in the Eurozone, the idea of the euro breaking up is just inconceivable. I mean, it's just not possible at all. If you speak to somebody in the UK, they would rather like it if it broke up, but they think it probably won't. But if you speak to an American, we had Paul Krugman out earlier today saying there's a 50% chance Greece is kicked out of the euro. Well, Greece can't be kicked out of the euro. But one of the more respected economists in the world is saying, well, actually, I think there's a possibility that this happens. So the further you get away from Europe, the more perhaps sceptical one is. And I don't think European politicians really realise just how badly they're being perceived on the international stage. I don't think that view has percolated through into Brussels yet.
Well said. Paul Donovan, let's look at this editorial Bloomberg View. From the editors of Bloomberg View, the IMF's electoral math doesn't add up, with a terrific graphic which really shows how silly the vote and capital allocations are. The notion of permanent European or U.S. leadership at either agency seems antiquated. When DSK resigned, economists identified finance experts in Singapore, Mexico, South Africa. Paul Donovan, what are we waiting for? From Bretton Woods in the 40s and the 50s, what are we waiting for?
Well, the problem is that politics moves a lot more slowly than the real world. I mean, in defence of the structure, emerging markets are still pretty irrelevant in the world economy and will be for another 20 or 30 years at least. 70% of global GDP is the OECD. So there is still a dominant role there for the OECD, and they do pay most of the money into the IMF, and that's the critical point. You pay your money, you get to pick who is going to be running the thing. On the other hand, the idea of nationality as a determinant of who is going to be in office, to me, is something that's quite abhorrent. I mean, you should be putting people in who are the most competent, regardless of nationality. There should be a meritocracy at the IMF and at the World Bank. I mean, it's not just Europe.
Right.
You Americans have got the World Bank president. You've got to take your share of the blame as well.